Hey there, random internet strangers. It's Random Crypto Guy, the worst crypto channel on YouTube. Da 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 da. Hooray! And welcome to another fine and exciting episode. People are still panicking. The stock market's crashing. What are we gonna do, Random Crypto Guy? What are we gonna do? Not time to panic yet, but it is time to take defensive postures. And so I'm going to go over that today, go over the charts. I don't really get to sit down much except over the weekends to sit down and look at the charts. So that's why, oops, I didn't want to do that. Get back here. So let's first take a look at the easy chart for all you maybe you're not as adept at technical analysis as others, or you just want to do cost dollar averaging. Well, I have a way to show you how to do it. That's the smart way. We will always want to buy when there's blood in the streets. And if we look at this, you can see when it turns red, that's the time to buy Bitcoin, because there's blood in the streets. People are panicking. Everything, everybody's worried, and you don't want to put your whole chunk on but you want to accumulate a little bit every day or every week, whatever your budget allows you to do. And you can see these times are very short periods of time. These are daily candles. So each day, if you would put in $10 a day, you'd have a couple $100 by the time you got to this area here. And then you would have pulled out here, stopped putting it in until you got to here. And then you would have started buying again. And we're reaching that time again. We had a nice run, but we're going into what I believe is just a correction. So, but you can see as of today, we have completely flipped on everything. So we are now officially in the bloodbath stage. Now, it's fortunate that we've only come down this far. I think there might be more upside, and I'll get to that in a minute. But in the meantime, if you are an accumulator, this would be the day to start doing that. Let's say you had $1,000. What I do is I would divide that up into maybe $100 a day or $10 a day. I wouldn't put the whole shebang on one day. And I'll get to explain why later, but basically if it goes down lower, then you have another $100 you're going to buy at a lower price. If it goes a little bit higher, you're still dollar cost averaging in, as opposed to just putting it all in one chunk and then trying to guess when the market is going to turn around again. This way you're buying in when the prices are low, when there's blood in the streets. And as of officially today, according to this chart anyway, there's blood in the streets. Now you have to remember, with technical analysis, if you throw enough spaghetti on the wall, something's going to stick. People say, oh, it's going to bounce off the 20 MA. It's going to bounce. It bounced off. That's all bullshit. The only ones that are really important are levels. The levels are king. The rest is just coincidental. And that has to do with, particularly with commodities like cryptocurrencies. Because it's supply and demand driven. And if you watch my video about my videos on supply and demand on my website, randomforexguy.com, you would know that. But if you're not interested in that, you just want to, dollar cost averaging, all you got to do is pull up this chart, put on the TSP, MA, S&D utility, and when it turns red, all flipped over, that's when you start dollar cost averaging in. And as I said, don't put your whole wad in on the first try. Just get a little bit every day or every week, whatever your portfolio holds. So, but we've officially reached that point today, according to this chart. Now, I don't think this is going to last very long, and I'll show you why. I'll go to my other charting software here. And we'll go to the S&P 500. The NASDAQ and the Dow are very similar. The stocks are just, taking a poop all over the place. But there is some good news here. As you can see, we've been going up here. This is QE, and I could go on and rant about QE. I decided to cut that out. I've already done this once, but I'm going to cut that rant out a little bit. But just know that QE, the banks, they have bonds, U.S. Treasury bonds, and that's basically the promise that your children are going to pay taxes, and they trade it for the Federal Reserve, who prints money out of thin air. And that's why I say that while the Federal Reserve prints the money out of thin air, it is backed by your children's taxes, and that's how this whole system perpetuates itself. And it just gets worse and worse. It's an insane system, and we need to get rid of it, and Bitcoin can do that. But I digress, and I don't want to go into that rant much deeper than that right now. Just know that they're stealing your children's taxes and mortgage interest payments. That's all you need to know right now. And I'll just keep repeating it until you understand where fiat currency comes from. But anyway, as you can see, the stock market took a big dump here. Went down into monthly support. This is our new daily support right here. And I had to draw these lines in. This was a 4-hour demand zone that got taken out, but it just barely took it out. So that's why I redrew it, to show that there was a demand zone right here. And we do have a nice green rejection candle right here. And this is a daily chart. So this was Friday. So we did go down and then seen a nice rejection right there. So the bulls are fighting back. And you can see we have a lot of 4-hour demand zones to get through before we plummet down to this area down here, where this is when we really got to start worrying about depressions and whatnot. We might be in a recession, but the Fed, like I said, they might steal your children's taxes and print more money to save the stock market. So we keep borrowing from our children to pay for today's prosperity. But in the meantime, we do have some demand levels that this demand level's dead, so I suspect this is probably going to go down a little bit further and reach into these demand levels before we see any type of turnaround. I don't think this is going to be a nice V shape, and as you can see, the upward movement is very slow compared to this downward spike into this first demand zone. It totally destroyed this demand zone here, and finally got some rejection at this demand zone right here. We finally got a nice rejection candle. So there is some little silver lining there that Friday was a good day. Powell came out and said that the Fed's going to help out. They're going to print more money, steal your children's money again to save the stock market. So there is that. So what does this have to do with Bitcoin? This is the daily chart on Bitcoin, and as you can see, we have a daily. This is a 4-hour support forming up here. This is 4-hour supply. Or actually demand here. This is 4-hour demand right here. So we have some demand forming up here. And my nephew was wondering what I was doing with Bitcoin when the stock market was crashing last week. And I told him to buy at 8,500. And this is why right here. Now my supply demand indicator doesn't do well with base rallies. So I had to draw that one in. And so we had a nice basing right here. So this is where I got my 8,500 target, is right here. And we did go down some exchanges went down to 83. So we have cleared a lot of this out already, although this particular broker didn't go down. It just tapped into around 84 something, around 84.50. Some have gone down as low as 83. Coinbase, I know, went to 83. So we're right in this demand zone right here. And we're forming up a new 4-hour demand zone, that's a positive bull sign. So that's good. But as I said, you can throw enough spaghetti on the wall, something sticks. That's the way it is with TA. So price is king and demand levels are king. and then everything else is secondary. Those are the things that you have to remember. So my quick trend is my Heiken Aishi, and we are still in a downtrend according to Heiken Aishi, and we have just entered the downtrend on my slow trend. This is my hold your horses trend. You know, that this one likes to jerk around real quick, whereas this one is a little bit more slow and methodical. And so when they're both in agreement, that's when we're totally in a bear market. But as I said, I can switch this around and make it a little faster, and we would show that we were already in a bear market if I wanted to make it faster or slower, depending on what's going on. But it's starting to look more and more like just a correction of sorts, and not just a total crash and burn of the markets and a total depression and panicking. So that's a good sign. It's definitely a good sign that that's the direction that we're heading. The next level, so we're forming up here, so that's good. The next real strong level, this actually is not, maybe the next strong one would be here. This level right here between, let's see, it's a very small level. Let's go down to 4 hour, probably might be able to see it better. Go down to 4 hour, and yeah, you see that this is, we have that level here. We're forming up a new level. We have this level here at 83, and then this level here be the next level at 77. So we are forming up some stuff, and then there's a level here. So here's another basing level here at 82. So we're not out of the woods yet, but we do have some relief here. And seeing going back to the S&P 500, this is got some pretty good demand. This is a pretty solid area. I mean, we busted through it, but we definitely seen some rejection, a strong rejection here. So that's a good thing. So I would definitely be starting to look for areas to buy. Whether you're dollar cost averaging, I wouldn't put your whole wad on it yet, but I would definitely start putting some money down. I have a buy position in here around 83, I think. No, 84. 84, right at the bottom of this. I have a position in, a small one, not a big one, but I want to get it at the best price possible. So, but I don't put my whole wad on there. I'm not betting the farm that this is going to turn around. You never do that, especially on rejection candles. You can start betting the farm when the momentum starts turning the other way, when everything starts coming up green and you get a nice base level, and then an oomph. What I'd be doing is looking for an oomph off of here. Then I would start betting the farm again on the buy side. But until then, I'm still continuing to buy and accumulate because I'm investing in Bitcoin. I'm not trading it, and so just want to look for the best places to buy when we do that. One of the things found myself kind of squirreling around, looking at different altcoins, and that's one of the reasons why I pulled out all my altcoin positions. And my next goal, I did collect 1 Bitcoin, so my next goal is to collect 32 Ether to prepare for when they go to proof of stake, because when you have 32 Ether, you can become a node, and that's something that I'm interested in becoming, to be able to collect Ether. So while Ether is cheap, and you can see right here, this is Ether. It's the daily Etherium versus United States dollar. We are still in an uptrend. According to here, we're getting a base here. We're starting to develop a base, so that's good. And so I will start moving positions in here around 215, 217. I'm putting on a position here right after I get off of this. I'll be putting on a position, small one, and slowly and gradually collecting it, and we'll see what happens. If it starts taking off, then I'll start putting a bigger position on it. But right now, I want to start accumulating it, small positions, right around 215 as of right now. and we'll see what happens. But next goal, 32 ETH.